Good afternoon. Today's date is 2/26/2015. The time is 1:19 p.m. Pacific Standard Time. In this particular video for our new MMTs, this is on Tesla. This is a 15-minute chart and how to trade a 15-minute breakout and understanding the support and then the big breakout 15-minute bar. And we went all the way up. So the low on Tesla today was $202 right here. We went 9 points higher to 211.09. This was how I buy at support, then sell at resistance, and sell short on a 15-minute chart. And then where these resistance levels are and how it's come all the way back down. Learn how to short using a 15-minute chart on Tesla. The other thing we're going to feature is the options that were set up, a $200 call and a $210 put, and $8.87 today's range. How to buy at support levels, how to sell short at resistance levels, and then again, I can buy at support with this lower high and learn how to sell short on a 15-minute chart. And basically, you can clearly see that this high was lower than that high. And yes, making a market goes both ways. I buy at support, I sell short at resistance, I buy to cover, take my profit, I go up, and I short again, and we've hit another support level. So the volatility is here, as it is, on 6,466,000 shares. Here we are on a 15-minute chart, and we're going to feature a $200 call on Tesla Motors. TSLA Motors. How to buy a call option and take it higher and sell on an intraday level. So you must do the following. Right here on Tesla, I'm going to show this $200 call that the price was down here at those lows. At the time, those lows were at a very significant low. And this low was right around $4.50, and they went straight up here. The value of that call went straight to the top. Continued to break out on the $200 call option intraday using a 15-minute chart. We are going to cover a weekly call. Expiration date 2/27. A $210 put. Expiration date 2/27. How to buy calls on weekly levels and how to buy puts based on the equity at support and resistance. These calls will expire tomorrow, and I'm going to show the following. Learn how to trade options. These call contracts were inflated up here in this price level, and mainly what I'm showing is that 97% or actually 99% of the people out here do not even understand that these calls were inflated. We bought them down here at $5 and they went up to $10. This is a weekly contract on Tesla $200 call. Now, based on that $200 call, that was the low of the morning trade. And the $200 call was right here, up 57%. Or a change of 1.86%, and the low where we bought them at around $4.50 right here, and the high was exactly 10.76, and we came out of those contracts. This is a call chart. It's a daily $200 call, but it expires on a weekly level tomorrow. And how to buy a weekly call option. Now we're going to focus on a weekly $210 put. So the low on these puts were $1.94, and the high on a weekly contract that expires tomorrow went way up here to $8. Now, let me show you And not only that, they had marked them down from the change from the open $3.25. That was a 47 point percent change drop. The low was 194 and the high was on 3,100 traded contracts. That's the volume. $8 was a high. Now learn how to trade a weekly contract. So when Tesla hit 211, that was the resistance. And the put option went from $1.95 all the way up here. How to trade a weekly $210 put on a weekly expiration Friday.